All right, so I am a few days behind here. So this chart that I will be reviewing is from the 20th, which is 4 days ago. But I've been so busy with Christmas stuff that I just haven't been able to review it. But I still want to make sure that I review each day and make sure that I get the most out of it. So I'm going over this even though it is a little bit late here. So first kind of mistake here. I drew this as an uptrend with a break and a new high. And Thomas actually drew this with a wider uptrend. So this is kind of weird to me because if you did draw the wider uptrend, well, prices pretty quickly pushed through there. I can see why maybe he did that. And I'm thinking that possibly he did because the second leg is so large and so strong that maybe it makes sense to draw a wider uptrend. Also, you can see that prices come back and they find some support even before or not even off of the EMA. So that shows there could be the support of a trend line here. And then you'll notice after the two legs down, prices start working higher again. So if this was just two legs up, well, you'd expect probably some sort of larger correction down. That's not what you get. Prices continue to work higher. So I can see why you might want to draw a wider uptrend here. It ends up getting you to the same place anyway, because if you had this shorter term uptrend with a break and a new high, that's basically the same thing as having the overshoot anyway, because you're not necessarily expecting a break and new high afterwards. So you would be slightly bullish biased, but it doesn't really matter in the long run, but at some point it might. So that's why I wanted to take a look at that. Next, I wanted to point out, this is not a mistake that I made, but actually just something that I'm a little bit happy with myself about, because whenever I was drawing these on the day, I was looking at this and I was saying, well, this is weird that this uptrend has an overshoot and we're getting this kind of like range-like structure, and then you get another uptrend with an overshoot and prices are continuing higher. This is a weird looking structure. You don't often get this. And I realized that it was a weird looking structure, but I still got it correct. So I'm just a little bit, proud of myself, a little bit happy that I did get this correct, despite the fact that it is a weird looking structure because, well, I don't have a picture of Thomas's chart right there, but Thomas did end up having the same chart. So I'm very happy with that. Next, here's a place where I almost made a mistake, and it was very close. I easily could have made a mistake here and had a losing trade. I was looking for a lower high after the breakout of the range. So why exactly is this not a good idea? Well, you can see first off my note right here, possible wider uptrend. Okay, if that's the case, then why am I looking to potentially take a short? Well, there's a few different reasons why I shouldn't have, despite the fact there could have been a wider uptrend, which I did note there. First off, you're getting pretty close to the overnight highs, and typically whenever you get this close to the overnight highs or the overnight lows, prices will just go ahead up and move to touch that. So you can see we're pretty close here to this blue line here, which is the overnight high. So that's probably where prices are targeting. Second, you traded up into this range. So you're not necessarily looking to fade it short. You're not necessarily looking to short it. Not that you can't, but it's not the strongest bet. Second, it's not a healthy trading range. You can see that you only touched the top side of this once. Maybe you can count that as twice, but this is not looking like a healthy trading range, especially considering the fact that prices are not touching the support. And the second thing I wanted to, or another thing that I wanted to look here, I guess the third, after the uptrends are having these overshoots, why isn't there like a really strong correction down? So you can see there was here. So uptrend gets an overshoot. There's a pretty big correction down. Okay, that makes sense. It goes down to the support. Okay, but then this uptrend right here, it has an overshoot. There's a tiny correction, and then you get another really strong move up right back through the EMA. This is a very, very strong move up. That's a sign that you probably don't want to be fading this. This is a lot of momentum here. Not to mention after the short-term uptrend gets a break in new high, prices are struggling to even come back to the EMA. So that's showing a lot of bullish bias right here, and you don't want to be looking to take short. The last thing is there are a lot of stacked dojis. This is definitely a congestive area. If this is a really, really big bearish bar, maybe you want to consider that. Even then, there's a lot of reasons why you wouldn't, but it would be a lot more tempting. But here you're looking at a really small little pin doji bar. So there's a lot of reasons why I shouldn't have been looking to take a short here. And I got pretty lucky that it didn't end up breaking lower, because if it did, I probably would have taken that. Now, next mistake here. At this point, we've broken out of the range and we pretty clearly have this uptrend here. It has an overshoot. Okay, so I got all that right. But I had the short-term downtrend here drawn with a close outside and new low. But it actually should have been wider like this. And why should it have been wider? Well, the reason is because it had an overshoot. Whenever you have an overshoot, you can make the case for drawing a wider trend, and you should probably go ahead and draw the wider trend in the opposite direction just in case, because oftentimes you will get a wider trend and a stronger correction after an overshoot. So here I shouldn't have been playing the short-term downtrend unless there was a super clear two legs back, but in this case, it all kind of looks like one leg back. And that did kind of lead me to take this trade, which I saw initially I thought it was a higher low after a second entry, but even before taking it, I did realize that it was actually a second entry long. There's no break higher in here. So it's truly just a first entry, second entry off the EMA. So I did notice that and I decided to take it anyway. Well, first off, this is against my rules. I shouldn't be doing that. I shouldn't be taking a second entry after an overshoot. But my kind of reasoning to myself and why I was willing to do that was because I saw it kind of as this short-term downtrend here with a break and a new low and then a higher low. So it almost looks like two legs back and then a higher low. So even though it is a second entry after an overshoot, really it looked to me like a higher low after like kind of a visual second entry. But either way, again, that's against my rules. I don't need to be taking the first second entry after an overshoot. And also I should have had this downtrend wider, in which case I would have been a lot more hesitant to take the second entry. And I would have probably been waiting on a higher low or failed second entry like you see here. And these are the better trades here. Definitely these are the better trades here. I then, where are we at? I then took this second entry long here, and I thought this was kind of a no-brainer here. You get a second entry long, you're still looking for the break in new high, this uptrend. But there's a few reasons why it's kind of aggressive and why Thomas marks it aggressive here. So you have to ask yourself, why didn't prices make the new high on the last push up? So you have the uptrend, the overshoot, you get a break, prices make a push higher, but they don't reach the highs. Okay, so that's kind of weird. And then they push below the EMA. So at this point, it is a little bit aggressive, and the signal bar is a smaller doji kind of signal bar. You can see it's definitely a doji signal bar right here. So it's definitely a little bit more of aggressive trade. Don't exactly know, how I feel about that, whether I, should have or shouldn't have taken it. It was definitely more aggressive, but it was within my rules. So I'm happy it worked out. I did notice, of course, it was a strong trend. So my thinking here was, okay, it's a strong trend. So you kind of just need to take setups, even if they're not necessarily perfect. And in this case, it did work out, but it's just something to keep an eye on later on. Now, next, this trade, this is a second entry long. I skipped this one because of the possible overshoot at this point. I was playing just this kind of medium term trend up here. There was another trend going on, and I did have that before, but then once prices kind of weren't really respecting that, and I felt like we were just playing this this like kind of medium term trend here, I ended up just switching to that and ditching the overall one, even though I thought there could be a larger trend. It's not super important to this trade, but the reason I skipped this was because of the overshoot. I knew I didn't want to take that, the next second entry there, and it's also not fully at the EMA. So there were kind of two reasons there. Well, while I think both those things were true, that's not the reason why Thomas decided to skip it. Thomas decided to skip it because it's congestive. So you can see there's this big bearish bar here, and there's 1, 2, 3 bars stacked within it, and the signal bar itself is a pure doji. So that definitely counts as congestion, and especially whenever you're looking at this as, having that possible overshoot, then it's just too aggressive there, even though it is a strong trend. So basically, I should have been paying a little bit more attention to that congestion there. And I'm sure the overshoot did play into him not taking it, but it sounds like that wasn't the full and most important reason. So it's just something to think about. I then took this failure, and this one was also a mistake. The thinking here, again, was that this is a really strong trend. And even though it's not necessarily the perfect failure, so I could tell that, maybe prices have moved a little bit too far. And this one leg back here, maybe I should wait on a second entry. But with this being such a strong trend, and the signal bar here was really just a perfect bullish signal bar, I figured it was worth it. But the reason you don't want to take it, like I said, is because it has kind of moved too far. So if you were to take a failure here, you want it to happen right above the EMA. So here you have a first entry. You'd want prices to pop right above the EMA and create the failed second entry right off it right there. You don't want to see prices move up a full leg and then come back. So at this point, you're going to want to wait on a second entry long. And that's what I should have been doing in this case. Not to mention here that prices did push back below the EMA. So showing that there could be some bear strength. So I did get lucky on that one. Even though it is within my rules, it's just something that is a little bit more nuanced and I need to pay attention to and not get too greedy. I think at this point, I was a little bit too locked in to the fact that it was a strong trend, and I was really pushing the rules and what I think is okay a little bit too far. So yes, in a strong trend, you do want to be a little bit more aggressive, but in this case, I think today I was being too aggressive. I think that's it. Yeah, so I think that's all I got. I didn't really see anything in here that I really wanted to study or look at some other trades to like see some comparisons. I did look through some charts just to see if anything kind of caught my eye. I looked through probably 10 or 15 charts of Thomas's just to see if there was anything kind of similar that caught my eye that I could maybe look at in comparison. But for the most part, I didn't really see anything I really wanted to study more. I guess maybe this like failures moving so far here. So I might actually pause this for a second and see if I can find just some examples of failures just to compare to this one and see if I can find any that have moved far. So I'll be right back. Okay, so I'm back. I looked at a few charts and found a few similar trades. I was hoping for some answers. I think I actually have more questions. So here's an example here. You have an uptrend. It's looking for a break a new high. This is actually very, very similar because you can see prices move down here. They basically create a double top and they come back and create the failed second entry. That's almost the exact same thing that happened here. For this uptrend, it has a break, prices move up, almost create a double top, and then come down to make the failure. So what are the differences? Well, there's a few. First off, there's no overshoot of the uptrend in this example, so you are expecting a break a new high a little bit more than you would on the other one. But I will say that this has been a very bullish day, and it's a very strong bullish day. So, maybe that's not the most important thing. The retracement down in this one is smaller. I think that's kind of the main thing as well. The retracements down is not nearly as steep as this one. This is a really strong push down with a big, strong bearish bar that pushes through the EMA. And you can see here prices don't push through the EMA, and there's wicks on the downside. It's not nearly as strong of a push down there. We also didn't move so far. So in this case, it kind of looks like prices are kind of moving sideways but up. Whereas in this example, prices kind of took off to the upside. So they moved pretty far to the upside. So there's definitely some differences there. I can see why this one would be marked as a good trade and this one wouldn't. But I have a couple more examples that don't really make as much sense to me. This one's also pretty similar because you have the uptrend that has an overshoot. You have a downtrend that plays out, and then you're pushing back above the EMA and an overall bullish bias. So you're expecting prices to go higher here. You do have a first entry, second entry failure. And Thomas does end up marking this one aggressive. You can't see the arrow here. But the reason that he chooses not to mark it as a really good high probability trade is, or at least as far as what he talked about, is solely because of the signal bar. And you'd have to take this on a double bar entry where you'd have to drop a pretty deep limit order back, especially considering the stop would be pretty big. But he doesn't mention at all about like how far prices have moved up here or how deep this retracement is. So that's where I'm a little bit confused here. And I don't actually know exactly why that one would be okay, but this one wouldn't, because both of these are pretty deep retracements and they've moved pretty far. One thing that I can note here is that on the way up, prices are a little bit more sideways in this case, where in this case, like prices kind of take off here. So maybe that's part of it. Another thing to note is that, yeah, we did close below the EMA. So in both these cases, we did close below the EMA, but you can see that it doesn't look quite as strong to the downside in this case. There are lots of wicks on the bottom side of each one of these bearish candles. So maybe there's a little bit more buying pressure, and you can see that there. Whereas this one, there's basically two full bars right here. So maybe that's part of it, but that feels kind of weak to me. And I would have trouble not taking a trade because of that, if that was the case. And the last one, here's another pretty similar example, mainly in the fact that prices move pretty far here. So obviously the context is different. You're coming off of a range low in this case. And Thomas does mark this as an aggressive trade. But the reason that he marked it aggressive was mainly because it's not fully clear. If you're counting the failure here, you're counting off this low and you're going first entry, it breaks higher than this bullish bar, breaks lower, and then goes higher again. So it's kind of like a little bit of a weird count. But the other reason here is that this downtrend doesn't have a very clear break into extreme. I mean, it's like a double bottom. But he doesn't mention at all, how far it's moved or the fact the prices then moved below the EMA. So again, those were like kind of the two things that I was looking at with this trade on like, okay, well, this is why you probably didn't want to take this one. But you can see that here's, those two examples that he does mark aggressive that have both those similarities. So I'm a little confused there, and I think I'm going to ask Thomas and see what he has to say, and what kind of insights I can get there. And if anybody else has anything to add, then definitely drop it in the comments. I'd love to hear. But that's it for me today. I still have another day that I have to review my chart from yesterday, so I'll probably do that tomorrow. I don't think I'm going to do it tonight, but I'll see you guys when I see you.